Lupin is known for its foray into complex generics. Now, it was one of the leading stocks in the pharma bull run from 2009 to 15. However, this shine was dulled by multiple cross-border M&A transactions that did not pay off, also regulatory headwinds and pricing pressures. In our ideas for profit today, I will discuss what is the outlook on this pharma major. Well, Q4 results of the company were aided by the domestic business. Consolidated sales wherein were broadly flattish, down about 1.1% year-on-year, with a decline in the US formulations that was offset by the growth in the domestic formulations. Now, gross margin was affected largely due to the change in the product or the geography mix. Subsequently, the EBITDA margin also contracted, where the high employee cost was actually offset by the lower other expenses. Also, in the US business, the sales had improved sequentially on the back of the ramp up in the thyroid medicine or the levothyroxine medicine. The company expects to improve market share over here from the current 13% to 20% plus in the medium term. Note that the FY20 has actually emerged as a welcome exception in the span of last 5 years, wherein the sales have increased in the US business on account of new launches and also better traction in the existing products as well. Now, this has really helped in countering price erosion in the US market, which is believed to be in the median range of -5 to 8% year-on-year. Now, the company's cumulative R&D expense in the last 5 years has been in the upwards of $1 billion $1 billion at the run rate of 10 to 14% of the sales. Now, the management also expects strong impetus for R&D to really continue to further its foray in the complex generics pharma space. Now, for the US market, it has a strong complex generics pipeline where it plans to launch 56 products addressing the cumulative market size of $37 billion in the next 5 years. Lupin has also one of the strongest pipelines in the inhalation subsegment, where it plans to launch 8 metered dose inhaler or dry powder inhaler as well. Other than the inhalation products which have actually got higher demand due to COVID-19, the company has also increased its focus on a COVID-related drug azithromycin, which has doubled the capacity for the same and retains highest market share in the US market in this category alone. Now, in the past 3 months, the company received positive regulatory inspection from US FDA, that's the drug regulator there, and other agencies such as that of the UK and Mexico for 8 sites. Plants wherein the company is working towards remediation actions for the US FDA are Somerset, Goa and Pithampur. Now, further, the company also has 158 drug applications pending for approval. In FY20 alone, the company filed 21 ANDAs and 2 new drug applications as well. Having said that, one near-term development which needs to be on a close watch is the regulatory action for the popular diabetes drug metformin. Now, US FDA has actually mentioned that at the industry level, some of the batches of metformin have been found having higher levels of an impurity called N-nitrosodimethylamine, which is carcinogenic in nature. On the positive side, the company has actually sold its stake in the Japanese subsidiary for 1220 crore rupees. Now, this transaction not only helped in debt reduction and streamlining focus of the business, but also it cut down the amortization expense also for the company. Now, in addition, various restructuring initiatives also help in reducing expected tax rate from 40% to 35% in FY21, and therefore a post-tax return ratio are also expected to improve from here on for the company. Now, with some positive traction in the US business and cost control measures in the Indian business as well, its operating margin is close to a trough as well. Now, while the stock valuation of 11 times FY22 estimated EV to EBITDA is not very inexpensive at the moment, it is expected positive developments on the product pipeline and the restructuring initiatives that the company is taking, which is adding to the comfort at these levels. However, investors with high risk appetite should only consider accumulating it at lower levels.